Yes, we can. All set. Hello and welcome everybody to today's very special session, the live commodity market analysis with the Gold and Silver Club, presented by myself, Phil Carr, for the 23rd of February 2017. So during today's session, we will be covering live market analysis. We will talk you through how we expect the markets to move next, a watch list of trading opportunities and an overview of the commodity markets. And of course, we'll be going through our top trades of the week as well. We are at a very interesting point today because we've seen gold now break out to 3-month highs. Silver is breaking out as well. We're seeing platinum surge and also palladium. So we do have a lot to cover with you on today's session. So just before we get started, let me just do a quick intro for the Gold and Silver Club for you. So the Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldensilverclub.com. Okay, so before we go into the charts, we'll just give you a quick rundown of the top performing markets so far in 2017. So you will see the metals remain among the top performers. Palladium is up over 13%. Silver also up over 13%. Platinum is up over 11%. We've also got coffee up over 8%, wheat up 8%, gold up 8%. It's just broken out today to 3-month highs, which we'll take a look at. And also other agricultural markets such as cotton up over 5%, corn up over 5% on this year as well. So with that, guys, we'll move over to technical analysis. As always, any questions, any comments, do feel free to share those into the chat. So what we'll do, first of all, we'll go over to a raw chart here with gold firstly, because we discussed this on last week's session as well, where we were expecting this breakout. Essentially, we were looking for a break above the weekly highs here, which we now have today. You can see, in fact, we've broken above the neckline here. We've actually done this just over the last hour or so. We've broken above 1,245 US dollars per ounce. So gold is currently trading at 1,248. You will note here, there's a few points to note here just in terms of the overall price structure. First of all, gold is at the daily highs right now. So this level that we're at the moment with gold, this takes us up to the highest levels going back to the end of October, beginning of November. So we're currently at approximately the 3-month highs. And you can see at the moment we're surging, very likely to hit 1250 next. That will be the next major area of resistance. Now, we saw over the last week, we had this, essentially this bull flag formation, which we broke out from. So last week on Thursday, this is where we saw into the close after Janet Yellen's testimony. We had a retest of previous level of resistance at the 1220 zone, which turned into a level of support. We saw a nice strong close here and we surged into the close. And following on from that, we got additional follow through on Friday, over Thursday and Friday as well. And you remember last week we were talking about we were long. We continue to be in our buy positions on gold. We are long gold at the moment. It has broken above the 3-month high neckline here. We had a pullback yesterday just prior to the minutes from the FOMC, but ultimately we have seen additional follow through so far today. So if we go over and have a look at the weekly chart, you will note this is really important. If you're having a look at the weekly price structure here for gold, we've now broken above the neckline. So this was a very important level for gold to breach because we continue to consolidate at this level, and we've now cleared this level over the last hour and a half. Very clearly, we've got a V-shaped reversal pattern, very clear underlying trend channel. Gold is surging at the moment, higher high, also a higher low as well. And we've got a very clear underlying trend channel on this market too. Now, if we go over to the daily chart, we'll just break it down for you in terms of the next key levels that we're looking at. We've built some pressure overhead over the last few days. We've been stuck in quite a tight range, which is unusual for gold. Today, it's had a resolution. It is broken out higher. The next major zones you want to look at would be psychological levels such as 1250, which normally you'd expect some sort of resistance at that zone initially, and then we're looking for our breakout and follow through up to essentially the 200-day moving average, which we've discussed before. That is our profit target, which sits on gold at the moment. We've got multiple entries on this market where we've continued to get in since the beginning of the year, since the January effect started at the end of December. Gold is up over 8% on the year now, continue to follow through. Pullback so far this year have been buying opportunities. Now, at the moment, we are looking for around the 1262 zone, around the 200-day moving average, as the level that we're looking to come out of some profits on this position. And then we'll have to adjust according to how the price structure is looking if we do get there. But we see a fair amount of clean air here for a breakout higher. Now, moving over also to the other metals, if we have a look at silver, silver has also managed to pop higher today as well. So we've now broken above a key level of resistance. You can see here silver is now one of the best performing commodities this year. It has gained now, actually it's in second place after palladium. It's gained over 13%. And you can see very much like gold, it's broken out to the highest level since November now. So we've back amongst the 3-month highs. We've also broken above the weekly resistance zones here as well. And what I find interesting about silver at the moment is if we have a look at this on a monthly chart, you can see where silver has developed this basing formation over the last month. What I would consider this to be would be a much larger bear flag formation on the monthly chart. So if you have a look at the overall price structure where we've essentially come back down to a major underlying trend channel of support, and we've broken above a bull flag formation here. So we've been consolidating over the last 6 months after Brexit in 2016. We've come all the way back down to the lower end of a major underlying trend channel, broken above that level in February. And I would consider this to be up and running now for a much larger bull flag formation and follow through. So if we have a look at silver based on the weekly chart, silver has essentially, very much like gold here, it's broken out above last week's highs here. You can see consecutively where we've continued to have higher lows, higher highs, higher weekly closes as well. And silver has been a very steady mover here, one of the steadiest movers so far this year in terms of the markets that we track. You can see very clearly we haven't had this sort of big volatile moves that we got in 2016 where you would see significant gains over 2 or 3 days, and then essentially you would see a lot of those gains get just given back. So far, we haven't seen that. We've just seen these very consistent moves higher, and essentially every pullback so far that we've seen over 2017 has been treated as a buying opportunity. And at the moment, we've broken above the 3-month highs. You can see where we cleared above the weekly highs, and now really there's a lot of clean air until we get up to the next major overhead level of resistance, which is sitting approximately at $18.72 per ounce here. So that is the next major overhead zone that we'll be looking for potentially for silver to continue to follow through to. So bear that in mind at the moment that we have broken above some critical levels. Now, as we've discussed previously, one market you want to track if you are trading the metals, and particularly if you trade gold versus the US dollar, is gold versus the euro. And if you have a look at my chart here, gold versus the euro has broken out above yesterday's high. We formed a doji into the close yesterday after the minutes of the FOMC. We initially saw a pullback prior to the minutes of the FOMC, and then we closed with an indecision candle on the daily chart. And today we've already had enough momentum to take out yesterday's high. And essentially gold versus the euro has been trading above the 200-day moving average for approximately about 2 weeks now. So this has really led the move higher in gold against the US dollar. Whenever there is a disparity, so if you see gold versus the US dollar going down, but gold versus the the euro, excuse me, if you see gold versus the US dollar going down and gold versus the euro going up, it's typically gold versus the euro, which is correct in terms of the overall price of gold and where it is due to head next. So right at this point, gold versus the US dollar is breaking out to the upside. We expect more short-term momentum. Essentially, it's doing exactly what we predicted last week in terms of a consolidation and the potential to break out higher here to the upside, and that is what we're seeing at the moment with gold. We've continued this overall momentum and continuation to the upside. Now, moving over to a few of the other markets which we track at the moment, if we have a look at the US dollar index, you can see the US dollar index has had a couple of runs up, a couple of attempts to run up to the 50-day moving average and clear that level, which have been failed over the last week. So we've had a runaway move here over the last couple of weeks since we came back towards the 100-day moving average. We've retested that key level of support and we've continued to build a base from that zone. So we've seen an attempted breakout last week above the 50-day moving average, which then got sold back into attempted breakout again yesterday, which so far we're seeing some pressure again on the US dollar. And at this point in time, the US dollar also is having a limited impact on gold. Even the surges that we've seen over the last week have really had very muted impact here on gold priced in US dollars. We've just continued to see gold versus the US dollar move sideways, and essentially it looks like a continuation pattern for that market. Now, moving over also to platinum and palladium, it's also worth having both of these markets on your radar as well. So platinum here, we have broken above also the weekly highs. We've got a move back towards 1,100. I apologize for some of the background noise if you can hear that here, guys. We've got a storm at the moment in London. Just bear with me 1 minute. Okay, hopefully that will resolve any of the background noise, guys. But essentially, at the moment, if we move over to platinum at the moment, it has managed to hold on to underlying support around 990 US dollars per ounce. Would be bouncing off that level of support over really the last couple of weeks here, and we seem to have had a resolution. So we've been consolidating here in price, moving sideways for a couple of weeks, and we've finally seen a pop higher today. So overall, the metals complex, if we have a look at platinum, palladium, gold, silver, they all continue to be very strong movers here in 2017. We've got a lot of follow through over the last week and a half or so. We've continued to break out to the upside following on from the recent consolidation. And in fact, if we move it over and have a look at palladium, you can see here palladium also up over 13% in 2017, has just had a very limited retrace back towards a 21-day moving average, bouncing off that level today. And in fact, it's not too far away from the 18-month highs here as well. So the overall picture here on the metals right now looks strong. It is bullish, and we'll continue to monitor this. We've got several levels that we're looking for gold to reach next here on the recent breakout. Today is a very important day, so if you have been tracking gold over the last couple of weeks here, where it's just been sitting within this range really since the beginning of February, today is the day we've been waiting for. I mean, it's good timing during this session right now, because we have finally broken above the neckline. We've broken above the 2.5-month highs here, and it will be interesting next to see whether gold can really follow through. What we need to see here is a close above this resistance zone, so a close above 1,245 US dollars per ounce. We need to see a close above this level ideally today in order to continue the momentum to the upside. We are targeting about another $20 move here on gold, so we'd like to see a move back up towards 1,260 US dollars per ounce around that next key level of resistance, which sits and marries up with the 200-day moving average as well. Now, another market which I want to put on your radar, which is less discussed normally, but it is just worth being aware of right now, is cocoa. The reason I mentioned cocoa is recently it has become one of the most extremely oversold markets out there. And if we have a look at the levels which it's tested over the last couple of weeks here, it's come down to a major underlying level of support, the multi-year lows going back to 2008, where so far on the monthly chart, we are seeing a capitulation form here right now. So we've got a very strong rejection candle, which is developing on the monthly chart. If we go over to the daily chart here, which I've just annotated, you can see here where we've got a V-shaped reversal potential capitulation developing as well, where what we need to see next, I've just highlighted that on the chart here, would be a close above this downward trending channel. Now, cocoa, in my opinion, could actually be quite a significant mover this year, because it's often the case that the worst performing commodities from the previous year can become the best performing commodities the following year. And cocoa was the worst performing commodity of 2016. And once it does reach a bottom, once it starts to get going and building momentum up, if you can catch it near the lows, it offers a very good risk to reward potential. And I would keep this on your radar, because cocoa, once it gets going, can be a very fast mover. And essentially what I'm looking at the moment would be a break above the 2100 zone. So if we do get a move and a break above that level, that is where we could really start to see cocoa build up some momentum. And then what we'll be watching as we go into March will be follow through, breaking above the monthly highs from February as well, and essentially getting a base and building up some momentum from these multi-year lows, where it's come back down and tested the 8-year lows here. And you can see the last time we saw that level get breached, we actually saw in the following few months here, we saw over 1,500 point move over the course of 2008 after we did reach a bottom at that level. So I put that on your radar. Cocoa is going to be a trade which will probably develop in the following months here, but this could be a very key reversal point, and I would just make you aware of that, particularly for longer term trades. If you look to have some longer term core positions in your portfolio, cocoa is worth a look at the moment. It's not quite there yet where it's given us enough confirmation to therefore really build into this position in a large way, but we're testing some key levels right now. And if we can get a few additional closes above the previous day's high, start to develop within this V-shaped reversal pattern, break the neckline, and essentially if cocoa can close above the 50-day moving average, then we could really start to see some additional momentum build up in this market, and you might be wise to get a position on this too. We could see some significant gains in the months ahead. Another market here, which I will also put on your radar, is coffee. So coffee has now broken out from also a bull flag formation here, which we've been anticipating, and a V-shaped reversal pattern as well. There's a few different formations which have confirmed for us here. Essentially on coffee, what you need to know is that overall, this is in our opinion, it's a buy at the moment. We've come down to retest key levels of support. We've retraced to the levels where we needed to see coffee find support around the 140 level last week. It rallied into the close on Friday and confirmed our buy signal. We continue to hold positions in this market. Overall, we're looking for higher prices on coffee in the weeks to come here. We're looking to take out this swing high on the left of the chart, and we're ultimately looking for another revisit up to the 160 zone. So we're looking for more follow through here in the weeks to come here on coffee. So that's another market I'll also just put on your radar here as well. It's had a good run up over the beginning of January. We had quite a significant move off the December lows here. So we had it was actually up over 8% over the first 3 weeks of January here. It subsequently pulled back and come back to a key level of support around the 140 zone, and in our opinion, this is getting ready for the next leg up. Also, oil. If we move over to WTI crude oil, US oil, today will be interesting. We've got the US oil inventories coming out today because we had a bank holiday on Monday. So we have the US oil inventories coming out this afternoon in approximately just under 2 hours at 4 o'clock London time. Now, what I would be looking at, there's definitely a battle between the bulls and the bears. You will note how much underlying support there has been just here around the 50-day moving average. That has been a very important level that traders have not been able to penetrate. Certainly, sellers in the oil market have not been able to break oil back below the 50-day moving average, especially on a closing basis. So we've got quite a lot of underlying support at the moment. We've seen oil break out so far today just below 55 US dollars per barrel. We had an attempted breakout with oil on Tuesday, which then sold into the close and closed back below this overhead trend channel. We had a push lower yesterday, which we wanted to see whether the sellers and bears in the market would be successful in breaking the recent underlying trend channel and support. However, we did see it get bid back into the close, and so far today, you can see we've already breached above yesterday's high, and we're making another attempt to break 55 US dollars per barrel. Now, if we move it over to the weekly chart, this is really what you want to focus your attention on if you're looking for new positions on oil. Essentially, it has broken above the last 6 weeks of consolidation here. We've broken above the key level of resistance of $54.66 per barrel. So far, though, the bulls in this market have not been able to maintain the price above this level on a daily closing basis or a weekly closing basis. If we can close above resistance on a daily and also a weekly closing basis, this turns into a buy signal. We would look to go long, and we'd be targeting a move back towards $60 per barrel. So we're keeping a very close eye on the weekly chart. You must look at the weekly chart if you're trading oil here. We'd be consolidating throughout most of 2017. The longer we stay in a range like this, the more likely we are to have quite a significant move once this does get going, once we see a clear direction picked. One thing to watch out for as well is bull traps at the moment. So getting caught out on buying oil on these breakouts when then it gets sold back into again towards the close. I am aware there are a significant amount of traders who are buying into rallies on oil at the moment. Sorry, excuse me, are selling into rallies at the moment on oil, which is why on a daily closing basis, we're just getting these strong rejection candles form and we're not seeing follow through. So I would just put that on your radar, that really what I'd like to see here for oil in order to confirm a long, for buyers to get more heavily into this trade, would be a close here above the previous day's high and also above $55 per barrel. Also, if we take out the high from yesterday, which is sitting at the moment around $55.15 per barrel, if we take out that level, so we breach above that inverse hammer, that is also where we should see more momentum to the upside. Ultimately, if we see a break above $55.75 per barrel, that is where we should see oil really get going. We should see a lot of fuel behind this, and we should see oil catch fire for a run up towards $60. So that's what I would have on the radar right now. For me, it's not quite confirmed for buyers right now, in the sense that we haven't had the close that we would like to see, and it is still vulnerable to selling pressure on the oil inventories. We'll have to see how those come out later on today. We've got those coming out in the next 2 hours or so. We'll see how those affect oil and whether we do see follow through to the upside, or whether that produces more sellers selling into rallies here. So oil, though, is getting very close to a resolution, and I would also be monitoring this market very closely. A number of commodities throughout February have been consolidating, and today we're starting to see some of these markets break out. So gold, of course, is one of those which has been consolidating throughout most of February. And in fact, today is the day where we've seen the breakout above resistance here. So we're starting to see some good momentum to the upside, and I'm expecting additional follow through on this move essentially that gold is going through right now. Especially just take it out to the weekly chart. The weekly chart, if you're getting bogged down on lower time frames such as 15-minute, 30-minute, 1 hour, 4 hour, take a look at the weekly chart, because overall, if you have a look at the weekly chart for gold, it really helps you to determine what side of the trade you should be in, what the overall price structure is. You can see very clear V-shaped reversal pattern on the weekly chart, higher closes. Most weeks we've only had 1 week of 1 week where we had a negative on gold on a weekly closing basis in 2017 so far. But other than that, this looks to be the eighth week out of 9 that we will close with a higher close on the week, higher low, and also a higher high. And you can see here the amount of clean air that gold potentially has to follow through here on a break, on a follow through and a break above the neckline at the moment. So really, in terms of the next major levels, these are the ones that you want to pay attention to at the moment. We're coming up and we're actually retesting that around that level at the moment. That's the 50% level, going back to the swing highs from 2016 after Brexit to the lows after the December FOMC statement. So you can see gold is testing that level at the moment. Follow through beyond that zone, I would look for initial resistance around the 1260 zone, possible psychological resistance at 1250 as well, just being a very key round number. The 1250 level was a very important level in October that did get defended. We saw that level get reached a number of times. I'll show you on the chart here. If we go back to this level, yeah, the 1250 zone was the level that we saw very key support on a closing basis at 1250 a number of times at the end of September, beginning of October. We didn't manage to break that level until after the US election. So the 1250 zone, you can also mark that on your chart as a level where we broke down prior to Brexit, and that was the level where we saw over 1,000 point move in 1 day on Brexit, was 1250. So it is a significant level. So we will likely see a little bit of resistance at that zone, but if we can break and clear above 1250, then we have a clean run up higher to 1260 initially, and then we could get significant upside here for, if you look at the weekly chart, for a move all the way up to the 1280s. So just bear that in mind at the moment. If you've got long positions on gold, what we're looking at the moment in terms of the price structure, make sure you're looking at higher timeframes as well as lower timeframes. That will give you a much better idea of where the market is heading. And also have a look at some of the correlated markets, silver especially as well. Silver's had quite a significant pop today, so it's got above the last couple of weeks of resistance here, the monthly pivot as well. And also you want to just be aware of what gold versus the euro is doing, which is breaking out at the moment to we're almost actually on gold against the euro. It's almost taken out the highs prior to the US election. Okay, so that's interesting. So if we were to see, let's say, another 100-point move higher on gold versus the euro, it would take out the highs from the US election over November. And if the same was to happen with gold versus the US dollar, that would be the equivalent of gold versus the US dollar. I believe that would be the equivalent of breaking above the 1300 levels. Let's have a look. If gold versus the euro did that, gold versus the US dollar, excuse me, yeah, I mean, that would equate to a break certainly above the 1300s. So just bear that in mind. That's what we're looking at the moment with gold, silver. Also, we'll have a look at palladium as well. I think we've looked at palladium a little bit earlier, but we'll just revisit this in terms of the overall price structure at the moment. Again, palladium not too far away from the 18-month highs here as well. Wouldn't take much for another breakout and a follow through to clear above the 18-month highs here too. And lastly, I think that's it in terms of the major markets that we just want to keep you updated on. The last one would just be the 10-year bonds, which have a strong correlation with gold, which is slowly but surely building a good base at the moment. And you would expect, if there's going to be more follow through here with gold, that 10-year bonds would also get a similar lift higher as well. They've recently come back down to the lower end of the trend channel, retested the 50-day moving average. They're building quite a decent base right now, and they've got more upside potential. So with that said, guys, let's just move over to the top trades that we've had over the last week as well, just to give you an idea of the positions that we've had. So our portfolio performance using our exclusive research-driven strategies. So we've got an open trade on gold at the moment. We've entered several positions over the course of 2017, and we've continued to add on additional breakouts and pullbacks here as we've maintained the overall upward trend, which you can see on the weekly chart. So one of our additional positions here, once we broke above the neckline here, the V-shaped reversal pattern neckline, is currently up over 320 points in profit. It's still open at the moment. We're targeting higher prices. We've also taken advantage of the recent breakdown in natural gas last week, now exiting the trade for 280 points profit after we broke through support. And we've also capitalized on the palladium breakout, where we saw it resurge and break back out to the highs here of 2017 when it broke out towards the 18-month highs. So those have been some of the top trades over the last week. If you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, you can get access to the Gold and Silver Club, to our live trading rooms during the week. All of the trades that we are taking, all you need to do is go across to www.jointhegoldensilverclub.com, complete the application form. We will get in touch with you ASAP. So again, it's just www.jointhegoldensilverclub.com. What do you get access to? Who's it for? Okay, so just to give you an idea of how the Gold and Silver Club works for our live trading room program, essentially it is for either if you're a new trader and you just want to develop a solid understanding of the markets, fast track your results, or if you're an experienced trader but you just really want to take your trading to the next level. You might have experience with Forex or the stock markets and limited experience with commodities. And if you really want to take your trading to that next level, become more consistent, profitable, the private members live trading room is definitely something for you to consider. So by being a member, you get access to our live trading room webinars. So during the week, you get access to our live trading rooms, and you also get access to all of the recordings. You get notifications, emails, and SMS. So every single trade that we take, we alert you to our entry, exit, our take profit, trade management, day-to-day updates on each of our positions. So you get to track our portfolio. You can see exactly the trades that we are in, exiting, new trades that we're taking on a daily basis. You also get our commodity research and market insights. So our proprietary trading research, really there to help boost your win rate and make sure you're getting on the right side of each trade. So as a member of the private members live trading room, you get access to our live trading rooms during the week. You get live trade setups ready to implement. You get notifications via email, SMS, so you're not missing out on profitable trades. You get exact details of where we're entering, exiting, placing a stop loss. You also get a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and mentoring and institutional level research and commodity insights to give you the ultimate edge in the market. So again, if you'd like to get access to that, if you'd like to become a member of the Gold and Silver Club, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so it's www.jointhegoldandsilverclub.com. And of course, I very much look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. So with that said, I wish you all a profitable day, good trading, guys, and all the best. And we look forward to speak with you on the next one. Okay, take care, everyone, and good trading. Thanks, guys. Bye-bye.